Mohnish Pabrai invested in another Turkish company. Considering his last investment in Reysash returned him over 4 to 5 times on dollar basis, can we expect such great returns again? To find out, let's dive in. As we can see in this document, he invested additional 357 Turkish liras to TAV Airports, which brought his ownership in the company above 5% threshold for declaring ownership to CAP. He bought his additional shares on 14th of July with an average share price of just under 50 liras. The stock is currently trading at 65 liras, which means that if you want to invest now, you have to pay around 30% premium to what Mohnish has paid. TAV Airports constructs terminal buildings and manages and operates terminals or airports in Turkey, Kazakhstan, Georgia, Macedonia, Latvia, Tunisia, Saudi Arabia, Oman, Spain, and internationally. It operates through terminal operations, catering operations, duty-free operations, ground handling, and bus operations, and other segments. So almost everything that airlines don't do, it is TAV Airports that's doing it. Before going further on their business, let's take a look at their ownership. Free float on Turkish stock market is at 47%. Group ADP owns the most shares with 46%. 6.3% of the company is owned by 2 Turkish construction firms. Of course, now we know Mohnish owns over 5% of that free float as well. TAV Airports operates 15 airports in 8 countries. By the way, this is just the airports, not the other services. This map shows the areas TAV Airports operate at. Looking at the map, I would consider an investment at TAV Airports is a bet on developing countries, which reminds me of a famous Charlie Munger quote. The first rule of fishing is fish where the fish are. But TAV Airports, in my opinion, is also a value play, which I will talk about later in this video. Now, let's take a look at how they grow. TAV Airports are growing in mainly 2 ways. They buy the rights to operate new airports, and they increase the revenue per airport year over year. Of course, their service business is also growing, but that's not where most of the company's revenue is coming from. Airports have strategic importance for countries, and just like having 2 railroads in the same route doesn't make sense as infrastructure, airports are the same as well. Turkey made a new airport in Istanbul in 2018, and since TAV Airports had the rights to operate the old airport at the same side of the city, Turkish made a payment to subsidize TAV's lost revenue according to their contract. Airports are therefore comparable to train businesses that own the right to operate on important routes. In my opinion, that gives a moat around TAV Airports. And the airports that TAV is authorized to operate are crucial ones in my opinion. Antalya Airport, for example, is the busiest airport in Mediterranean. Here we have a chart that shows TAV's concessions and fare structure at the airports. TAV is a Turkish-based company, and as we all know, lira is losing its value and has very high inflation. TAV Airports, even though they are a Turkish-based company, has their revenues mostly in dollars and in euros. As you can see here, starting from Ankara, going to Antalya, all of these airports are in Turkey, yet the fee structure is mostly in euros. The only Turkish lira is here in Alanya Airport, which it's only domestic flights. Mohnish has talked about how he looks for companies with euro and dollar revenue stream in Turkey before, so I think that's one thing about TAV Airports that he finds very attractive. TAV Airports' income stream is in euro and in dollars, but their costs, and especially the labor costs, are mostly in lira, which means as Turkish lira loses its value, which will probably keep losing because of the low interest rates policy combined with the high inflation, at the same time, TAV Airports' net income is increasing because of that. Because in real terms, their cost of labor is going down. As I stated before, TAV Airports have made very important achievements on their airport's concession duration. From their last annual report, they said, after winning the Antalya Airport tender, the EBITDA weighted average concession duration of our portfolio increased from 8 years in 2020 to 30 years. I would consider this new duration has widened their moat significantly. I took this part from their last annual report, and if you want you can stop the video and read it in its entirety. It talks about Almaty acquisition, and I just want to point out this part where it says, thanks to this defensive revenue profile, the airport made a new net profit even in 2020, when the pandemic conditions were the most severe. Here we have the income statement. Obviously, the effect of COVID-19 is clearly visible in 2020 and in 2021. Company's current market cap is around 24 billion liras, in other words, 1.3 billion euros. Assuming they return to around 2019 levels next year. By the way, they now have Almaty Airports as well, which company describes as one of its flagships, but on the other hand, in 2019, they had a huge amount in total extraordinary items, which is not a trustworthy recurring income. Assuming they make 300 million euros, their price to earnings ratio would be around 4, which it's currently at 30. And here we have the company's first half 2022 results. Revenue and EBITDA are up huge, mostly because of Almaty acquisition and recovery from COVID. So we have talked about the business and its financials, but are they shareholder friendly? Or in other words, do they do buybacks or do they pay dividends? This graph is again from their annual report. TAV Airports generally likes to reward their shareholders with dividend distributions. Most Turkish companies don't do share repurchases as far as I can see. And as we can see in this graph, they have stopped the dividend payments since COVID, but remain determined to return it, and their dividend payments in euro basis was trending upwards. And you can see here. So in my opinion, it is a relief for foreign investors, and of course, no investment comes without a risk. So now, let's look at the risks of investing in TAV Airports. First of all, Turkey's current economic situation. In modern history of Turkey, the country never defaulted on its debt. However, the current inflation is over 80% and lira has lost over 80% of its value against the dollar in just the last 5 years. And Turkey accounts for an underwhelming majority of TAV Airports business. And even though they are hedged with most of their contracts being in dollars and in euros, a sudden stop in Turkish economy would probably mean less business for airports. And of course, TAV Airports margins have shrunk significantly since COVID, and if they can't recover their margins soon enough, the multiples market is currently giving to the company could shrink. And it is not just Turkey that TAV Airports needs to worry. Almost all of their business is in developing countries. Emerging nations would suffer far more than wealthy nations from an economic downturn or possibly stagflation. And of course, TAV Airports uses debt to increase their business and to grow it. Even with their strong 2019 EBITDA, they have a net debt over EBITDA of 5.9. I find that to be high, but in the same period, the company managed to get Almaty Airport and their concession duration went from 8 to 30 years on average. So the debt part of the company depends on what you think of the management's capital allocation progress. So to summarize, TAV Airports have a huge moat around the business that they operate. And I believe that they managed to expand it even further in the last several years, while also increasing the amount of debt that they had. By the way, I wanna point out that as long as the expected return is higher than the cost of capital, debt is a fine way to grow the business, in my opinion. And TAV Airports is also a shareholder-friendly company. They like to return to their shareholders with dividend distributions, and before the pandemic, their dividend distributions in euro basis was trending upwards, and they say that they are determined to return the dividend to their investors in their last annual report. So it's not like a small growth company that just doesn't care about their shareholders and dilute them consistently. And also, there is not an overvaluation on the company, in my opinion, as long as they manage to get their income pandemic levels. And also, there are very strong signs that they will even pass it in the coming year. So I would say your downside is fairly protected. And lastly, TAV Airports is a Turkey-based company and is highly exposed to developing countries. In my opinion, such a business model poses greater structural risk than your typical S&P 500 corporation. And also, TAV Airports does not carry a net cash position. They leverage their business through debt, which could be problematic for the company during a time of crisis. So anyway, that was it for today. I hope you enjoyed it. Please subscribe to my channel if you liked, and I'll see you in the next one.